Welcome to the new Crypto Week. It's Ted here with Bodies and Wicks. If you don't know what that means, it means a candlestick. Yeah, candlestick for technical analysis, because that's how I do my technical analysis for smart money. Anyways, what we're going to be doing this episode is going over what has been happening this past week. I know a lot of people are kind of up and down about speculations, what's going on with Luna. I really don't have much to say about Luna, but I just know it just flattened to the curve. And we're also going to be talking about what could possibly happen next week. And if you've seen my previous videos, not much of my analysis changed, but we'll get into it. So we'll see what happens. Not long intro this time, I swear to God. I swear to God, it's not a long intro this time, so hang tight. All right. If you do like smart money, what I would like you to do is go ahead and click that like button, hit the subscribe button. If you don't understand smart money and you want to know more, do the same. Hit that subscribe button, hit that like button. I'll try to come out with a video at least once a week. I'm just extremely bogged down with work right now, or else I'd be trying to come out with more. But what I am going to try to do once a week is give you as much good information as possible. Also, I'll give you some information off my locals. I am giving away basically 1 month free to my locals channel. Access to it, I'll put the link in the description. I think I've already tweeted it out already as well. So if you can't find me, I'm at bodiesxwicks on Twitter. I may have put it on Facebook, I'm not for sure, but I'm trying to give out the full month and access to my locals because that's where a lot of my signals are going to be coming from, and they're going to be coming from Core. A lot of people, if you don't know what that is, I'll be showing you what that is too. Actually, let's just go ahead and get into it. So basically what's been happening with me over this past week and a half is I'm going to show you. What I started doing is I took a lot of my earnings, right, as they were down, right, and then I put a lot of it into like APY accounts, so such as Nexo, right? And I put quite a bit of my earnings into Nexo, with the prices being down the way they are. That way, whenever it starts to pick back up, the APY starts to pick back up, hopefully this account will be, I'll be hitting it out of the park with, just savings on this account. So I started basically over again on my KuCoin account. I should be playing with LBank too. But right now I've just been doing KuCoin. To me, it's the easy. They're both about the same, but to me, I've just been used to KuCoin, so I've been doing KuCoin. So started off with a low KuCoin account, about $100, right? And I've built it up to about 400 over the past 3 or 4 weeks or so. I'm going to try to keep building it until I can get about, hopefully I want to get 10,000 by the end of this year. That's my challenge to myself, right? I don't know why there's still a subscribe and like thing behind me. Anyways, I'm going to go ahead and go to the earnings part of this. So here is the core portion, I guess you could say, of the app. And now this what this is showing you. This is showing you the week right now. As you can see, I am number 21 in the week, and what I wanted to show you was that how many 5 stars are actually in the top 2021. A lot of them are in the top 10, yeah, but there's not that many from that point on, except for me. I'm at 21, and that's only because I nailed the Monero trade today. And if you were following my my locals account, you would have got that Monero trade. So let me see here. I kind of had these all listed out, and let's see if I can get through this. Basically, it's gonna be interesting how I did this. Okay, so close that one out. Pull this one. Oops. Well, there's supposed to be one up, but it didn't close out. Maybe I need to close this one out. There. Oh no. I need to close both of these out and open more up. There we go. Okay, so this right here is well, this one still says week. I don't know why. Did that one not close? Week. Wait, which one is open? That's what I'm confused about. None of these should be open. Oh, I see what happened. Okay, never mind. All right, now we're good. All right. Now I gotta hope I remember where I was. All right, so yeah, that was the week. Anyways, because of the week, I wanted to go back and kind of show you, what I've been doing as far as futures have been concerned. So, here are a few examples of the futures trades I have made, and I thought I had spread these out, but I guess I didn't. But let me go ahead and move this one over here really quick. So here we go. On this side over here, we have, it looks like the end of April, right? I mean, they're not huge wins. Don't get me wrong. None of these are like huge, humongous wins. But the thing is as long as you don't take huge losses as well, and you're getting more wins than you are taking losses, you're going to grow this account, right? So that's my whole point behind this right now. So as you can see, this day, that's when I was trading Ape. What was it? A little bit more, about somewhat a little bit more than $6, about $7 or something like that. Hey, it's $7 in a day just for, and especially while I'm working. I'm just paying attention to the charts. And then this one here, this is, let me see here, 5.7, 5.6, or something, 5.9. So, oh yeah, so there we go. See, so as you can see, anything from 35 cents, 33 cents to $7, right? So all of this side added up over here on the right side. Let's see, it's here, 7, 8, 10, 15, about $17, something like that, over the course of a couple days. Not bad at all. Again, just for having $100 in the account and trying to slowly but surely roll this up. I'm not gambling big, I guess you could say. I'm not putting a whole lot of lots out there. I'm not putting a huge margin out there. My margin is generally anywhere between 5 and 9. I usually don't try to go any higher than 10, especially with crypto, because crypto has some wild swings, and if you get caught on the wrong side of the swing, it can go bad for you. I'm telling you. So I generally try to keep it mild. I try to keep a stop loss, right? So let's turn those down, and let's get the next two up. All right, let me move one of them. All right, so one of these I think I put on Instagram. I'm not for sure. Yeah, it was this one. It was because, it says Bitcoin plus small ETH win equals out the Monero loss that I had, was to leave $50 in an ETH win. So what I'm basically saying is I have the big ETH win right here. That was $50 right here. and the rest of it kind of canceled out the $8 loss is what I'm saying. So, hey, there's $50 that I just made on a nice trade, and a lot of it was ETH. I just had the wrong. Maybe I shouldn't have closed Monero out that early. I don't know. Maybe I had a stop loss. I can't remember. Usually I have a stop loss, but I'm not for sure if I did with this one because I was very sure of myself that Monero was going to go the other way. But either or. All right, now let's look to the left side. I know we're used to reading left to right, but I'm dyslexic today. Left to right, look at all these ETH, and then there's some apes as well. These also go back to, let's see here, May 9th. So these are a little bit earlier than the ones I showed you on the right. Anywhere between, again, I think it's the same one I showed you earlier, 33 cents to 78 cents. So, oops, sorry about that. Either way, yeah, I think you're getting the drift here. Take those off. Well, actually, hold on. Let me see. This is one I didn't show you. I accidentally did not click on this one. Hold on. Okay, so I'll just let this one be a lone wolf here for a second. Here I have small loss of ETH, $1.66, but had some good Bitcoin wins. $1.81, $11.88. That's $12.60 something, right? Plus the $1.15 XMR win. It's basically $14 right there. All within, what was one's the 14th, one's the 15th, one's the 16th. But they all got closed out, I think, right around the same time. So, and then where am I at here? Okay, this one. Here we go. There's another one. So here is, I'm just going to, oops, wrong one. Where is the one I just undid? Okay, there we go. Sorry. I'm trying to pull these to the middle so you can at least see them a little bit better. There you go. So here you go. Again, small wins. ETH $1.45, Bitcoin $2.30. Then I had a Bitcoin $8.55. Then I had an ETH $7.28. 15. That's over $20 pretty much, or almost $20. And that was in the span of the 11th and the 12th. So again, $30 in 2 days. Can't complain with that either. Let's go to the next one. That one I already showed you. And then here is this one. I don't think I have showed you. No, I haven't showed you this one. Here is a Monero win, a Ethereum win, a Bitcoin win, another Monero win, another Bitcoin win, another Ethereum win, anywhere ranging between 42 cents and $8.90. So, and I had some other decent ones here, $4.95, $5.75. I mean, if you're just starting out and you're trading, this is good for you. Like this is what you should be aiming for. Is just to put little pebbles on the pile until the pile becomes so big that you're swimming in a sea of cash. You know what I'm saying? Or at least I hope you know what I'm saying. But that's why I wanted to show you this, because this is what I'm doing right now. I'm not trying to hit it out of the park and trying to make thousands and thousands of dollars. I'm challenging myself to take a small account. Even though I already had a huge account, I'm setting that off to the side. I'm starting brand new. And I want to show you guys that it is possible, right, to do this. Just because you have a ton of money doesn't mean that, that's the only way you can win in the trading world. No. You can win with a small $100 account as long as you know how to form your bias. As long as you know how to form your trading bias and you know when to pull the trigger and you know when to get out. That is the biggest thing, because some of these, yeah, I probably did have larger, leverages than some of the others. Some of them I may have added more lots. So a lot of these are mixed. Usually when I start out with Bitcoin, I usually start off with a 0.005, right? And then if it starts getting into the red, right, a couple bucks into the red, I'll take a look at the chart, see where it's at. If I think it's going to start going, whichever direction I think it's supposed to go, all right, that my bias was started in the first place, I'll drop more in, and then I'll add more leverage. I know it's kind of counterintuitive. A lot of people would think so, but to me, what that does is that either moves up or moves let's just say I'm going long, right? What that will do is that will move down the entry price, right? And also adding more leverage will allow you to get above the entry price quicker, right? And if you're positive and if you're really sure about where your trade is going, you're going to end up fine. You're going to end up gaining money out of this, right? And then what I'll usually do is I will aim for short-term high or a bearish order block, something like that is what I will aim for, and we'll get into those in just a minute. But you got to be aiming for something, right? You can't just say, hey, I think this is going to go to XYZ, and then just hope it gets there. There has to be a specific area you are aiming for, right? And I'll show you those areas that you need to be aiming for. It needs to be an imbalance or an area of liquidity. Those are the two areas that price loves to go to, right? So, all right. That being said, I think the last thing I wanted to show you was this. And it's behind it's behind the one I wanted to show you. No, okay. So this right here is what kind of helped me, and it's not on Tradingview. If you are on Tradingview, what this is this is a bar chart, or it comes from barchart.com basically. So what do I mean by that? I mean that whenever you go to barchart.com, it gives you a couple of different options, right? Here, I'm going to move this up. And what you can do is actually, let me move this down so I can show you that it's Bitcoin for May of 2022. So I was looking at this chart, and as I'm looking at this chart, I look down here. What you want to do is you want to put it on Commitment of Traders report, right? And the Commitment of Traders report is the bottom half of this with this blue, green, red line, right? What that does is that tells you where the retail traders are as far as their net longs. I guess somehow they determine this by the size of the accounts, and the red is the commercial, right? So the red is the one where the biggest money is, right? This is where all the money is, right? I want to say this one right here, this is the green one. This is the large speculators. So this would be like your hedge fund managers, kind of. People look me. I guess there is now retirement. 401ks and things like that with Bitcoin in it. Those would be your kind of people. This is not your huge institutions like your Chase Bank or your Deutsche Bank or your IMF or anything like that. Even though I'm not for sure if they're trading in Bitcoin just yet, I'm sure they are, though. I'm sure they're not stupid. I'm sure these people in the Davos group are not dumb, and they know that Bitcoin is a real threat to their way of life, to their means of money. That, hey, everybody can be rich too. So that being said, why is this important? Okay, The importance of this is because it tells you where those rich people are as far as their nets are. Are they net long or are they net short? Well, the best way to do this, right, is to actually, and I know it has a 0 right here, but generally that's not the best measure to cut it in half to tell you exactly where everybody is net long, net short. It's best to average it out and then cut where the middle of the average is, right? So the average here actually probably is maybe just above the 0, just because, well, I don't know, because both of these on the opposite ends of the spectrum are pretty even, right around that negative 5,000 and above 5,000 mark. So maybe this one is right around that 5,000, maybe just a little bit above, because you can, well, no, because that red's below it now. Okay, never mind. Yeah, excuse me, I'm rambling. Yeah, you can see that the commercials are net short. So if the commercials are net short and they continue to be net short, where does your mind go, right? That's what you should be thinking. If the people that have all the money are net short on this, why shouldn't I be net short? Right? So a lot of what you saw on that previously on those screens is me shorting Bitcoin and ETH. That was a lot of shorts. Now, I did the ones earlier in the month. I longed Ape and I long XMR. But I've been shorting Bitcoin and ETH because those are the ones that primarily the market follows. And also, those are the ones that are easiest, I guess, to follow along. I'm trying to figure out what the word is here. If the bankers are short, primarily short on Bitcoin, that should tell you that they have some kind of hunch, or I don't know if it's insider trading or if it's because the algorithm that I talk about, they know the algorithm too. That's why they're called smart money. That they are also net short. So that being said, let's go ahead and head to the charts. Well, I guess we're not in the charts just yet, but this is my locals account, and this is the Monero call that I made. Entry price 162, take profit 188, and it says my expectation was right. And I called it in 32 days. It probably happened within, when I called it on May 15th, so it happened in 7. So hey, I can't complain. So I just said, hey, we're off to a good start with this week with Monero. And with my futurism, my leverage was about 8. I put in about 1.5 lots, made about 31% of my own money. So, and that one wasn't included actually in the screenshots because this just happened. And I took the screenshots, I think, earlier. But let's get to, well, actually, I accidentally just deleted the first one. How about that? So let's get back to the first one, which is, if I can get it to come up, there we go, Tradingview. It was Bitcoin. I just accidentally deleted it somehow. I hit the wrong button on the I hit the X button on Brave here. If you guys don't use Brave browser, I suggest checking it out. It's really, really cool. It has its own crypto wallet. You can earn, BAT tokens just by simply, it'll put advertisements in front of you, and you can choose how many advertisements you want, per hour. If you don't want any advertisements, you can put 0. I put the maximum amount though. I want 10 an hour because I want to try to rack up as much BAT as I can. And that this BAT will also connect to your Gemini account. So if you have a Gemini account, after each month, it'll automatically deposit that BAT into the Gemini account, and then it will automatically stake it. So you can't go wrong with that. I don't see where you can go wrong with that. So, yeah, I just moved the chart a little bit. Sorry about that. So we are on Bitcoin. I am on the monthly of Bitcoin. So the reason I'm on the monthly is because I am still talking about this monthly order block, right? Let me duplicate this and go to a different one that I don't have a tons of notes all over. So usually whenever I do the main ones like Bitcoin and Ethereum and stuff like that, I will draw on the Coinbase version. And that the reason being is because Coinbase has the most users, right? So it's generally the most accurate of all of them. However, I can do this Bitcoin index of all time. This will be fine. That Tradingview has. So what I am currently focused on right now is this fair value gap right here. And let me make sure I got it. Yep. This fair value gap right here. Now, this is the one that we hadn't hit before previously, right? Last summer, we got close to it. We filled up this fair value gap instead. The fair value gap that made up the month of January, meaning on each side of January you had December, right? And then you had February. And look at that. In between each of those months, you had a big imbalance, right? So, anytime that does happen, I get worried. I get worried. Anytime, especially when there's a monthly and there's a fair value gap, I get worried. I'm like, it's gonna come back, guys. I'm sorry. And I think that's an issue a lot of people have. An issue that a lot of people don't realize, that these fair value gaps attract price, right? They do. They just, there's no ifs, ands, or buts about it. They attract price, right? Because there is a void there, basically. Even though that if you get on like the 15-minute, all of this could be filled in, right? But it doesn't matter, right? Larger time frames definitely outweigh the smaller time frames, right? So that's why I like starting with the monthly, because I like seeing where there is the fair value gaps on a monthly chart, right? That being said, this one here was also the one that scared me. Was the one that was created during the month of December 2020. So the previous side was, November 2020, opposite side, January 21. This one was the one that broke the high, right? The previous high that we had, right? Almost $20,000. And then we never looked back. Never looked back after we broke that high. We just went up and then we came back down. But the thing was, if you noticed, we never came back down in what some people would say, they would say testing the, the support. I don't call this support. To me, this is a pivot point, right? So we haven't came down and even tested that yet. Now, granted, we don't have to. That's the good thing. We don't have to. However, if we did, then we know that basically this whole fair value gap would be completely filled, and we wouldn't have to worry about price coming back down there again. That's the good thing. So yeah, we may end up getting all the way back down to like 19,800 or something like that, just barely below 20,000. And if we do, don't freak out, please. Don't freak out. I'm begging you, don't freak out. That is a good thing. That just means that price is filling the imbalance that it the algorithm had known it had filled, or it needed to fill, I should say. So I know a lot of people are freaking out right now, thinking that this is a bear market. Oh my God, we're never getting out of this. And that. People are so complaining right now, especially when I get into the Tradingview chat. I'm just like, guys, come on. It's really not that difficult. You know, just do some 30, 60, 90-day analysis, you know, do a look back, you know, go to the daily, right? Go to the daily, and then this is what I was taught, right? Go to the daily. Let me see if I can find the one with the information on info line. There we go. So we are currently here, or actually what I want to do is I will take the peak, right? I'll take the peak. Take the peak, and let's go 30 days out from that. Okay, so I think that's it. Oh no, 36 bars. $30 days out. Okay. And now a good thing now that I got 30 days out is that we can just keep doing it. Copy, paste. All right. I should probably change the color of this too. This is way too dark. Style. Let's go with yellow. I like yellow. Yellow is nice and bright. And what date was this? November 21st. So that one went to December 21st. Perfect. I don't know if the other one's December 21st, but I'm just going to do this really quick. No, didn't delete that one. That was not the color I wanted, guys. Okay, here we go. There we go. So this is called the 90-day, you know, look forward, I guess you could say, or 90-day look back, whatever you want to call it. It's basically taking a look back at where we were at a peak and then trying to draw a conclusion from 90 days from that, right? So, and as you can see, 90 days, it looks like, we made a little valley or something like that. We kind of made a swing high, right? Made a little bit of a swing high on that 90 days. Okay. Perfect. Cool. Now let's do another one. All right, there's one. Oops, didn't mean to move that. How do I lock that in? There we go. Two and three. Okay. So now, boom, another 90 days. Or actually, no, that was 2. Sorry, that's 60 days. 60 days, even after 60 days, now you're starting to get the drop, right? Now we put in another 90 days. Guess what? We're about where we're at. So, 90, you know, that's 2 90-day look backs. That's 6 months, right? I think, I'm not for sure what it was. Okay, so this was November. This was April, right? Okay, so let's do the info line here. $210 bars. Okay. Is that right? 210 days? Okay, so that would have been, and if I did 90 would be 180. That would be an extra month, right? An extra month past that 6-month period. So this is seven months, if I'm not mistaken. April, May, June, July, August, September, October. Yep. Hold on. May. Forgot. I counted April. May, June, July, August, September, October. 6 months. Oh, November, 7 months. Okay, yeah, it is 7 months. Maybe this is the cycle. Maybe this is the cycle that crypto has. Maybe it's a 7 month cycle. I don't know. I haven't, to be honest, I haven't went back and checked out what we had done previously. December 2017. Let's think about, hold on 1 second. Let's do a little thingy here. All right, 7 months from the last time that we had a peak. It looks like it came down. We had a slight peak, right? But that was it. And then, hold on. Let's mark these out. Let's seriously do some good investigative work right now, okay? All right, so 7 months out from there, what do we get? We get a drop, right? And then it's on its way back up. Now, by the way, I'm doing 7 months. So I'm doing what we did from peak to peak last time. All right, so here, in this 7 months, about halfway between the 7 months, is when we get another high. So I wonder what this time frame is. 291. Okay, so less than a year. Now, granted, it didn't break the high at that point, but still, what did it do? After this dropped dramatically, rebounded, came back up, made a short-term high. It broke that one. So that right there is a break of structure. That right there should tell you, okay, things are starting to get bullish. It broke that break of structure that it created after falling back in February and March of 18. So that's what it should be telling you. That's where my brain would go anyway. And 291 days. Jeez. Or no, sorry, 550. Wait, is it 556? Yeah, 556. My bad. Jeez. Okay, so I'm working this all wrong. December 17th to June of 2019. Yeah, that's about 556 days. So that's about a year and a half that we had basically a kind of a lull, and then finally we came up, made a little bit of a peak in June of 19. I remember that. And then, yeah, I was going to say that was right around that 10,000 mark, 11,000 mark that we couldn't get above. We couldn't get above it. It was hard. And everybody thought that was the resistance zone. Oh my God, it was a resistance zone. No, it wasn't a resistance zone, guys. What that was, right? Because if it was a resistance zone, this guy wouldn't have been able to get above it. Now would have. Nor would have the second one that got above it, that made 12,000, right? Instead, this was kind of a fake out, right? This was kind of a, hey, we're starting to get bullish, but guess what? Boom, we're going to pull back down. And then we had COVID, okay? So this is the area of COVID. So that sucked, but guess what? It still didn't get as low as what it could have been. It got pretty low, got down to 3,000, but geez, 3,000 in 2020, I don't think people ever imagined it ever getting to 3,000. So that is, if you look at that, that's a huge bright side. And then it didn't take long for it to rebound after that. Look, May, we're already back up to 10,000 2 months later. And then it wasn't until August, I want to say. Yeah, I remember getting up to about 13,000, somewhere around there. And that's when I was like, holy crap, it finally broke 10,000. And whenever it did that, that's when I knew we were probably going to see some movement. Because I knew it wasn't going to break 10,000 and just fall. That would have been stupid. Because at the time, stock market was going up too. Stock market was doing very, very well. I was more of in Forex at that time, and also stock indices. But I still paid attention to Bitcoin. Now I heavily pay attention to it. So that being said, as soon as it made that small little valley, and then boom, it ran up and broke this high, right? Whatever this high was, 13,906. Interestingly enough, that high runs at the bottom of this monthly fair value gap. Interesting. How interesting of that. It's like they almost planned it. Oh, and look at this one too. At the high of the previous one. Also runs at the bottom of this crazy fair value gap. It's almost like smart money planned it. Wow. Yes, they do these things. It's all part of the algorithm. They have the money and the means to control these charts, and they will do it to suck you dry. Technical difficulty. Sorry about that. Stepped on my own wire. I need to get something for that. All right. Now, that being said, whenever we did have these huge rallies, that's when I started getting concerned, especially in February when Musk announced, he was going to do his treasuries and Bitcoin and stuff like that. And then I think this is it right here. Right. Yeah, this is it right here where it just took off. To me, that was not everybody in the world buying. That was institutions heavily buying. Because they knew that if they heavily bought then, they could get the rest of the retail crowd to buy with them. Right? And if they could get the rest of the retail crowd to buy with them, they could just stop at any point at buying, and the retail crowd would take care of it. And they probably did. I mean, I'm not for sure how much of this is institutional influence. These little drops here. I'm sure some of them are. Most of them are. But then again, so is the rallies. The rallies are definitely influenced by the larger, financial institutions. So, welcome to the new Crypto Week. It's Ted here with Bodies and Wicks. If you don't know what that means, it means a candlestick. Yeah, candlestick for technical analysis, because that's how I do my technical analysis for smart money.